T Rowe Price Stock, ticker symbol T Rowe. Is this the best dividend growth stock to buy right now? This stock is up 4% year to date, but it has been a bumpy ride so far. We have seen $130, but also $100, giving you a lot of potential buying options. From a dividend point of view, things look pretty interesting with dividend yield at 4.29% and also 36 years of dividend growth. On the 2nd of May, T Rowe Price presented quarter results where they beat on EPS, but missed on revenue by a small margin. For the upcoming earnings, analysts have a mixed feeling. So does this mean that T Rowe stock is a buy at current prices? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does T Rowe Price do? T Rowe Price provides asset management services for individual and institutional investors. It offers a broad range of international stocks, hybrid, bonds and money market funds. Approximately 2/3 of the company management assets are held in retirement-based accounts, which provide T Rowe Price with a somewhat stickier client base than most of its peers. And if we dive in the most recent earnings report, we see that assets under management took a bit hit from 1.55 trillion in 2022 to 1.34 trillion in 2023. So yes, this is a problem, but it is highly impacted by the overall market performance. So to be honest, it doesn't worry me that much, and in my opinion they will do fine in the long run. We already see a small increase from Q4 2022, the previous quarter, so it is starting to recover. Earnings per share was reported at $1.83, which is again a big drop year over year, when it was reported at $2.41. But if you compare it to previous quarter, it doesn't look that bad. And the best part, T Rowe was able to increase the dividends from $1.2 to $1.22, which is also very nice under these conditions. We also see that dividends were easily covered by the EPS, resulting in a payout ratio of 72% based on the current EPS. In here we see that assets under management, one of the more important numbers for this company, has increased very nice and steady over the past decade. But most recently it took a hit, but it is starting to recover, which is a good thing. And this is also reflected in this sheet with the net revenues. Q1 2023 versus Q4 2024 looks way better versus comparing Q1 2022. Operating income and net income also took a bit hit in 2022, but it's climbing up again, which is a good thing. The margin is increasing again as well, which is also something that I really like. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. T Rowe Price is a 25 billion market cap company. PE ratio is at 18, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for T Rowe stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 6 billion, and in this graph we see that revenue went up really nice and steady. We see of course the same thing over and over again, that in 2022 the revenue started to decrease. Most recently it's climbing up again, which is somehow not included in this chart. Over a longer period of time margins are going up, which is something that I really like. And yes, once again we see a big decrease in 2022. But it's recovering, and as we saw in the earnings report, it's climbing up again, which is a good thing. EPS is going up really nice and steady, and is also recovering in the most recent quarter. So this is something that I really like. Analysts expect in 2023 to see a negative number, but from 2024 they think T Rowe will increase the EPS at mid-single digits, which is pretty nice. And it's pretty much the same story with the revenue in the coming years. Return on assets is sitting at 16%, which is a great number. And it's the same story with the return on equity. It's looking rock solid. And the most important number, return on invested capital, is sitting at 11%, which is a really good number. The only downside is that it's lower than the 5-year average, and again highly impacted by recent events, so nothing to worry about for the long run in my opinion. Current ratio is at 3.46, which looks pretty high to me, but companies like T Rowe tend to have a higher number here. Nevertheless, keep an eye on this number. Total debt is sitting at 425 million, and I prefer companies that can pay down at least a third of the total debt with the total cash position. Right now, total cash is sitting at 2 billion, so they can pay down a big chunk of their total debt, which is something that I really like. Even in difficult times like this and the recent month, T Rowe is having a great balance sheet in my opinion. But it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And in here we see that free cash flow is going up quite nice and steady over a longer period of time. There are some years that are really low or high. Overall it does look pretty good to me. The thing that I love about this company are the shares outstanding. It's going down in the long run. It means when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 4.29%, which is a great number. Annual payout is at $4.88 and payout ratio is at 68%. I prefer 50% or lower, so right now they have roughly 32% left in cash to buy back shares, pay down debt, acquisitions, research and all other things. Usually I would say 68% is way too high, but it's starting to recover, so I think payout ratio will go down in the coming years. The 5-year growth rate is at almost 15%, which is a great number. On top of that, they grew the dividends for 36 years in a row, which is also pretty impressive. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that over a longer period of time payout ratio is always below 40%, which is really nice. I expect that in the coming quarters payout ratio will go down again to 40%. And in this graph we see the expected dividend in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. We see mixed results and analysis think dividends will be increasing at roughly the same growth numbers. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare T Rowe stock with the overall market, in this case the S&P 500. Next to that I added some competitors, State, Street and Ares Management. On the 5-year chart we see that T Rowe had a 6% return including dividends, which is of course a really low number, but it all has to do with the big drop in share price since late 2022. Ares has crushed these stocks with a 418% return. On the 1-year chart it looks pretty much the same. T Rowe had a negative 3% return while both the S&P 500 and STT had a small 6 and 10% return. Ares crushed all these stocks again with 31% return. On the 6-month chart it's again pretty much the same story, with T Rowe again returning a negative number here, and Ares crushing again with 33%. On the 1-month chart it's finally T Rowe with some decent returns. They beat the S&P 500 and STT, but Ares is again the winner with 12% return. So bottom line, T Rowe was beaten by the S&P 500 even with including dividends. However, 2022 seemed to play a big part in the performance of these stocks in terms of business and returns. So does this mean that T Rowe stock is a buy at current prices? Well, let's check the TROW Price stocks that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4, 5 and 6%, since I think they will increase their revenue at the same numbers versus the historical averages. Next to that, it's also based on the analysis expectations and the current outlook. For the profit margin and the free cash flow margin, I'm filling in 23, 25 and 27%. For the PE ratio and the price to free cash flow, I'm filling in 17, 18 and 19. It's a big company with great fundamentals and there is still some growth left. However, I don't want to overpay for the growth. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, TROW stock is at $113. I hit analyze, and we only see a few green numbers. We have a low price target of $87, which is a big drop from the current stock price. We have a mid price target of $106, and we have a high price target of $127. To me, the high price target is the most justified. I think this company will come back very strong in the coming quarters and return to historical growth numbers in terms of revenue and assets under management. My final conclusion on this company is that I really like the historical performance. In 2022 they took a big hit in stock price, but also in terms of business. This could be one of the better or interesting moments to take a closer look at this company. They have a rock solid balance sheet, there is potential growth, it's steady and consistent historically, and they pay great dividends. In terms of valuation, it doesn't look that bad either. For now, I'm really bullish on this company, and in my opinion they are undervalued. I can't wait to buy more shares of this company and keep collecting these massive dividends. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.